Let's talk. We're up 80 on the Dow, probably knocked down a little bit by Disney and Walmart. We'll talk about that in a minute. However, the S&P 500 up as much as 52 handles at one point during the day, trading off the green. Look at the green. Look at the green on that screen. Transports are off. The VIX is down. So the fear is out of the market, and the market is on a rally. 1.2 billion on the tape. Once again, curiously enough, we are basically 1-to-1 up volume, down volume. That means they're buying value. They're buying higher price stocks. They're buying S&P. They're buying tech, and that's a good thing. So we're getting out of some other names. When you have a market up 50-60 handles on the S&P and you've got 50-50 advance versus decline, that's significant in a lot of ways. That shows buyers of intent, and the sellers are getting out of stocks and rotating into other things, and that's super important. So what's the driving force? Look, we've been up one day, down one day ever since we had that economic news. We can go back to Wednesday Fed meeting, a lot of stuff, GNP on the table. People felt maybe you should have pivoted to dissenting governors. That was the first time since 1993. Then Friday, economic news came out, but no cut and no guidance for September. Very curious. Then Friday comes along, really weak numbers. Unemployment ticks up from 4.1 to 4.2. Jobs numbers very disappointing. Looking for 174, 147, came down at 40. Readjusted some earlier numbers, even worse than expected, so that wasn't good. However, initial reaction was down, the emotional reaction. The next day we were up, which was Monday. Super solid up day, which was basically because all of that poor economic data, as we know, the Federal Reserve's decision making is data-driven, and that means that there's more time and more proclivity to be cutting rates when you've got these poor economic numbers coming in, and that's a good thing. Longer rates, higher rates for longer does not do anybody any good. However, the economic cycle is a funny one. You can't cut rates when we're in low growth mode. Now we've got a little bit of the tariff thing on the shelf. Our growth is solid. GDP going from 3.4 to 4 or 2.5 to 3. I'm not sure. I can't remember. That's a big game changer. Bad economic numbers, that's where bad is good on Friday. The first reaction is emotional on the downside. The next day, Monday, follow through day when people assimilate and realize, oh, that economic data is poor. The Fed's going to look at it and go, you know what? Now's our time. We've got good growth with the GNP rising, and then we've got poor jobs, economic data on the weak side. Now is our time to cut. It probably won't cause stagflation, which was their fear. And then we had one day up, one day down, right? But yesterday was sort of a flatlining day where people were maybe taking some profits. It was a little bit of rotation. You can check out my video from yesterday. Today we were up. So look, maybe not a great deal with the UK. Still, deals are being made, right? They're on the table. We're in discussions. That's a good thing. They will adjust on the tariff side, but the earnings and the guidance is super solid, so they're boosted. A number of stocks, yes, we had Walmart and Disney dragging on the market, but otherwise market strong, and look at the tape. So we're back in solid mode, back in record high mode, and that is significant. If you want to learn how to trade futures, come to Wall Street Global Trading Academy. There's a webinar on the 13th. You want to access and funding to trade the futures, Apex Trader Funding, link in the bio. I love you all. See you in a minute.